We asked AI, how will new tariffs impact the economy over the next 2 years? New tariffs are being introduced. But what does that mean for the economy in the next year or two? Will prices surge overnight, or will the impact be gradual? How long before we start feeling it at the grocery store or gas pump? To answer these questions, we turned to AI for an in-depth analysis. Here's what it had to say. Section 1. How do tariffs impact the economy? Before we dive into AI's predictions, let's break down how tariffs actually work. A tariff is a tax on imported goods. Governments use them to protect domestic industries or as leverage in trade negotiations. But when tariffs increase, businesses that rely on imports face higher costs. And those costs usually get passed on to you, the consumer. So the big question is, how soon will this happen? Section 2. How long before prices rise? We asked AI. How long before the average person starts noticing price increases? AI predicts that the first noticeable price hikes could appear in as little as 3 to 6 months for everyday products like food, electronics, and clothing. This is because businesses already have existing stock and contracts, but once those run out, new shipments will reflect higher costs. For larger purchases like appliances, vehicles, or construction materials, it could take 12 to 18 months before the full impact is felt. And here's where it gets tricky. If trade tensions continue to escalate, these tariffs could trigger a domino effect, pushing inflation higher and causing ripple effects across multiple industries. Section 3. What to expect in the next 2 years. So, what will the economy look like over the next 1 to 2 years? Here's what AI predicts. Higher prices across the board. Expect rising costs for imported goods, especially food, tech, and everyday essentials. Companies will likely pass these costs on to consumers to protect their profit margins. Supply chain disruptions. Some industries may struggle to source materials at competitive prices, leading to shortages. If key components like computer chips or auto parts become more expensive, manufacturing slowdowns are possible. Changes in the job market. Some industries, like U.S. manufacturing, could see growth if domestic production becomes more competitive. But industries dependent on imports, like retail and construction, could face job cuts as costs rise. Stock market volatility. Investors don't like uncertainty. If businesses expect rising costs and trade tensions to continue, the stock market could experience sharp fluctuations. However, some domestic industries might benefit from reduced competition. Section 4. How this will affect your daily life. So, what does this mean for you? Groceries and essentials will likely cost more. Items like produce, dairy, and packaged foods often rely on imported ingredients or foreign suppliers. Gas and energy prices could fluctuate. If tariffs affect raw materials like oil and natural gas, expect price swings at the pump. Big purchases might be more expensive. If you're planning to buy a car, upgrade appliances, or invest in home improvement, waiting could mean paying more. Some products may take longer to arrive. If businesses switch suppliers to avoid tariffs, supply chain adjustments could lead to shipping delays. Closing thoughts? So, will tariffs help the economy or hurt it? That depends on who you ask. Supporters say tariffs protect domestic industries and create more local jobs. Critics argue they increase consumer costs and could lead to a trade war that damages the economy. But what do you think? Will tariffs make life better or worse in the next 2 years? Drop a comment below and let us know your thoughts. And if you found this discussion helpful, don't forget to like, subscribe, and stay tuned for more AI-driven insights.